Test, 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 test. Okay, we are up and running. Apologies for a short delay. I just had a issue with the camera for some reason. Okay, hi and welcome to another edition of TraderCast YouTube live trading, key trading levels and trading setups for popular markets. My name is Phil and I'll be your presenter today. This is a little bit about me. If you're looking for the community, check out TraderCast. If you are looking for the education, you can find more on mytradingskills.com. Over the past 10 years, I had the privilege of speaking in front of various different industry events, and I had the privilege of teaching many people how to trade. Now, big disclaimer here, this is not advice. This is basically what I feel it's practical application of technical analysis in real time, and this is what I feel a novice trader should be able to do. So very, very simple approach to trading. Price action, no indicators, no complicated strategies, very, very simple approach to trading. Okay, now here we go. These are my current positions. So I was long sterling dollar, if you remember, and I got stopped out on break even, so that was yesterday. I'm still long FTSE from 73.20. I'm also long Dow at 33,300, but I closed half of my position at 33,465 and I moved my stop loss higher. So I'll show you how I'm managing that position now. Dow is coming to a area now where I will likely be looking to take profits, or at least some profits, and leave maybe a little bit more running. And I'm still currently short dollar, Japanese yen at 115.55, and that's not doing well at the moment. That's a losing trade at the moment. Okay, so from the Dow point of view, this is the setup that I was looking at earlier on today. We have a clearly defined downtrend, breakout and a retest and a move higher. This is the hourly time frame, so basically a bullish flag forming here. 1, 2, 3 touches, breakout higher, and this is my potential take profit area. So I would likely be looking to take some partial profits here and then move the stop loss higher to protect myself in the case of this particular trade. So let me show you where I am with the Dow Jones, and then I have Euro dollar, I have Nasdaq set up, I have another FTSE, I have DAX, German DAX set up as well, cable. And
as we're now hearing from the French side, a French official saying Russia's Putin told France's Macron in a phone call today that if Ukraine's neutralization and disarmament cannot be reached diplomatically, he would carry on military operations.
Okay, so this is where I am with my current trade. So half of the profit
official also says there was nothing reassuring in what Putin told Macron. Putin showed his determination to carry on operations.
So I have my news on. Okay, so what I'm going to do is I'm going to move my stop higher towards just below the cluster of these lows at 33,760. This was a good area of take profit. Previous high, previous high, now retest of that level again. So this is my unrealized P&L for the remaining half of the position, and what I'm going to do is I'm going to take another 3 contracts out of this trade. So I'm going to cash this in, okay, and I'm going to leave the remaining two running just in a case if we do see a continuation to the upside, and my ultimate take profit is up here towards 34,370. So really happy with this trade. Otherwise, if I see a corrective pullback and a significant loss of this area, I will be stopped out with a remaining position. Currently my stop is above where I entered, and my stop loss is also my take profit area. So both of them are my take profit areas. Really happy with this trade, and leaving 2 contracts running. So it's basically not half of the half, it's slightly more than half of the half closed. at the moment. And you can see that this is the resistance, and that was the reason why I wanted to do that. The other thing that I was looking at was relevant for Nasdaq or US Tech Index. Very quickly, this appears to be coming to a fairly important level now. So we have a sequence of lower highs and we have a sequence of higher lows. That was that kind of energy build-up that I was telling you about, energy build-up, and they tend to precede an explosive reaction, which is what we got. And now this price is actually retesting that previous support as a newly found resistance of 14,380. This pattern also played out, and this pattern is a bullish continuation pattern, and the way they play out, they have the tendency to break in the direction of the prevailing trend. In this case it was to the upside. So this area here is definitely an area of interest from either a take profit area for somebody who was long this breakout, so they might be looking to take profit, or potentially for somebody who is looking for a reversal. So if a reversal happens here that looks like this, so maybe a shooting star forming here, or maybe a bearish engulfing here, or tweezers pattern here, or evening star reversal, something like this perhaps up here. Maybe even an inside bar here, so a doji or something here that could potentially trigger an interest for somebody to look for a shorting setup with a view to take profit down here towards 13,900. So this is not triggered just yet, because if we see a breakout, like so, and then a little retest from above, then all bets are off. This is no longer a shorting setup. This is a bullish breakout to the upside, potentially targeting extension towards 14,620, 14,750. So really key level for Nasdaq at the moment. Really key level for the Nasdaq at the moment. I'll keep you informed if I decide to do anything. I'll let you know, and that's where I am at the moment. The other position that I have open is FTSE. Actually, it's not. I just got stopped out on FTSE. Apologies. Yeah, I'm no longer in this trade. I'm out of FTSE 73.60. Not the best price. I could have got out at a better price. Yeah, 73.60. I'm out of that trade. So let me just show you. There's really nothing open there. But I decided to go long at 73.20, and I might go long again if I get a chance. I was long from 73.20 and I was looking for a push higher. My stop was above my below my entry and then higher, so I got stopped out literally just a few minutes ago with this candle here. So out of this trade. Okay, it's a profitable trade from 73.20 to 73.60, about 40 points. Not happy with this trade, really. I should have done better. I should have exited here. Yeah, when I saw this candle. That should have been my exit. And then in that case I would get 74.20, so 100 points in this trade rather than 40. You win some, and you win some with a little bit less, and then you lose some as well. So it doesn't matter. I was told long time ago that cashing in too soon or cashing in with your stop loss above your entry will not make you bankrupt. So so I'm sticking with that. Okay, I'm sticking with that. So cashing in too soon will definitely not make
you
win some, and you win some with. Okay, cool. So hi all, welcome. So I was just checking to see if this is streaming properly everywhere else. The last thing that I have open that I was telling you about is I was short dollar Japanese yen. I was short dollar Japanese yen yesterday. I think that was triggered live during the session. Yesterday it was a pending order that was triggered, and let me show you where I am with that trade at the moment. And here is the kind of explanation for that. So dollar yen is ranging here. There's a uptrend in a daily, but lately there's a bit of a ranging kind of sideways consolidation, and these levels have been tested in the past over and over and over and over and over again. So they represent a logical resistance area, Now how far can this go? Well, possibly down to these lows, and maybe even lower towards here. So what am I looking for? I'm looking for a very simple loss of support. So once you see this, okay, once you see how steep this trend line is, the angle of this trend line is very, very steep. The steeper the trend line, the weaker it becomes, because basically this becomes exuberant move, and at some point anybody who was long, it's looking to take profit like they did here, and then you see a corrective move, or up here, and then you see a corrective move. So the prevailing trend, longer term prevailing trend, is still intact, but this appears to be possibly pointing to a little bit of a profit taking, or maybe even a slight correction. Now a US dollar is very, very strong. US dollar is very, very strong. We have Federal Reserve Chair Jerome Powell speaking, and yesterday he said, I think we should carry on with our 25 basis point hike in March, and that satisfies the hawkish members of the Fed. And as soon as you're hiking rates as a central bank, that's normally perceived to be bullish for the underlying currency, in this case US dollar. But this is dollar yen, so potentially market was expecting a 50 basis points, where now they're going to get 25. So if he comes up today and says something slightly different, that he's maybe concerned about the developments in Ukraine and how that might impact their decisions to tighten monetary policy, or more and more people are talking about stagflation, therefore slower growth and increasing inflation and that kind of stuff. So all of that could possibly trigger some volatility in US dollar, which has been really, really strong, and you can see it against euro, where European Central Bank is not doing anything, and also against sterling as well. So this is dollar yen. So from the very, sorry, I'm probably boring you with this kind of economic data, and maybe explaining a little bit more from the fundamental point of view, but I just wanted to give you some flavor and a background. But anyway, from the key trading level, this is the level, and potentially what could happen now is we could see an oversold bounce back and then another leg lower, or we could see just a continuation of this selling pressure, selling pressure, selling pressure, and then I would expect to see a little bit of a pause around here for maybe another leg higher, and then from here possibly more to the downside, or breakouts above here and then continuation to the upside. So two scenarios here, really two scenarios here. This one would be more of a kind of textbook scenario, but that's where it is. So I'll show you where I am with this trade. That I am in this trade, but it's currently a losing trade, because I got in yesterday at a slightly different level. So let me just see. Here we go. And then what I'll do is I'll cover a few other things that could be of interest to you as well. So this is where I got in. I got in up here at 115.45, and basically what the price did, it did that, corrected. I was breaking even at that time, and then it carried on moving higher. Now let me show you where my stop loss is. So my stop is up here at 115.95. So there is about 50 points of risk on this trade. Where is my take profit or a limit order? Longer term limit order is down here at 114.45. So I'm risking 50 points to potentially make 100 points on this trade. I will readjust my position. I will definitely move the stop loss closer to the entry, at entry if I get a chance. I could be looking to take partial profits, or maybe even add to this position if I get more conviction that this is definitely turning and we could see a pull to the downside. But that's where I am with this trade. So currently this is a losing trade, but I'm still happy to stay in this trade for now. Just checking we are all okay. Can you all hear me okay? Do you need something covered? Let me know. I'll be more than happy to look at that. Okay. So now, where is that Dow trade? So look, there is a little bit of a profit taking, a little bit of a profit. So you can see that the wick, there is a selling pressure here. So I was really happy I took some partial profits when I did earlier on, because this type of approach is almost like a self-fulfilling prophecy. So loads of other people are considering the same or similar levels, and you should always ask yourself, what would the opposing side do? And if somebody was long, this is likely where they would like to take profit. If somebody is looking for a bearish setup, they're looking for a short-term rejection here. Why? Because it happened here, and it happened here, and it happened here. There is a possibility that it might happen here again. Okay, so that's where I am. So that's why I decided to take this money out of the table, and I would be paying attention how this candle closes. So this is the 15-minute candle. I want to see a 15-minute candle closing and giving me the indication of what I should do. Either closing my position altogether, or possibly looking for more to the upside, and then looking for 34,400 area for take profit. But that's where I am with the Dow. Happy with it. I'm really happy with
to the US cash equity open now at the bottom of the hour, and to further those on from those Vienna talks earlier reported. Further sources now on Twitter noting that on the have finished or not principles, that nothing is agreed until everything is agreed, as some issues are remaining.
Okay, so we talked about Dow, we talked about Nasdaq, we talked about FTSE, we talked about dollar, Japanese yen as well. Now what I want to do is I want to go and show you a gold and maybe crude, and then we can go and look at a few currencies as well. Bhavesh saying, yeah, we can hear you. Excellent, loud and clear. Hey Raj, lovely to meet you if you're new. Hi Raj. Okay, I don't know if I can do platinum and palladium. I don't know if I have the data on this particular charting package, but yeah, I can definitely check out gold. So gold appears to be coiling. So for those of you who've seen some of these sessions before, Raj, are you my friend Raj? Have we met before? Or is this somebody new? Okay, so gold is coiling. Gold is uptrending in a daily time frame. So the structure looks really bullish. And anytime you have escalation of geopolitical risk or maybe a market sell-off, smart and intelligent money takes money out of speculative investments like equities and then park them into some sort of safe haven. So in this case, this was oil, US dollar, gold is one of them as well. Sometimes it could be Swiss franc or Japanese yen. Now, so the way I'm seeing this is gold is coming to a fairly decent level with this coiling price action. This coiling price action normally precedes explosive breakouts. So what bulls are hoping for? Bulls are hoping for something like, sorry, I'll change the color of this so that we have blue and red so we can look what I'm doing. So bulls are looking for a breakout above here, then maybe a little retest. 1936, 1940 retest, and then explosive breakout higher, which would be equivalent of the widest point of this consolidation to the upside, which gives us this previous swing high as a take profit 1960. So bullish traders are looking for a breakout. They would be putting a stop loss down here, maybe 10 points below. So if they enter at 1936, 1940, they would put their stop loss at 1926 or 1930. So $10 in risk in price for the potential extension to the upside towards 1960, possibly even higher towards 2000. What bearish traders are looking, they're looking for a sell-off and a dip, in particular loss of these lows down here 1930. That could possibly open the way for a gradual move lower towards this rising trend line, where there would quite likely be a lot of buyers, and that comes to about 1905, 1900, 1890 level as well. In that case, they would put their stop losses very tightly, maybe 10 points below, and they would be looking for the extension to the upside towards 1960, 1975, even 2000 over a longer period of time. So that's where the gold is at the moment. I don't have any positions open in gold at this point in time. I don't have anything open in gold at this point in time, but that's what I'm looking at. Now, if we see a strengthening US dollar, that could possibly have this type of reaction. If we see some escalation in geopolitical risk, or maybe equity starts selling off for whichever reason, then we could see one of these babies play out. But that's the key level. 1936, 1940 on the upside, with the move towards potential extension of this existing trend towards 1960, assuming that we do not lose and create an end of day close below 1926. Alternatively, dip below and loss of 1920, in particular these clusters of the lows 1930, could open the way for a gradual move lower towards 1900, possibly even 1890. Hopefully this is clear and simple enough. Hopefully this is clear and simple enough. So that's where I am with gold at the moment. Raj, you're the usual Raj. Sorry, you had a different. Yes, of course you are. Of course you are. Now here we are. The other thing that we are talking about here is euro dollar and then also cable, and then that will lead me quite nicely to a euro sterling as well. So this is actually where are we now? 15 minutes. We still have about 3 minutes for this candle to finish, and that will be the open of US trading session. I just want to see how this plays out before I decide to. Yes, I am. It will likely be a middle of March, so in about a couple of weeks time. But yeah, all good. Here we go. So what I wanted to show you right now is a euro sterling, euro dollar, and this is already posted in the community as a potential analysis and a trade setup as well. The way I'm seeing this is this looks like a clearly downtrending market. So daily time frame is downtrending. You can see selling pressure, selling pressure, selling pressure. Stronger US dollar. Yet again, linking to what Fed Powell was speaking of. And then also how most of the people are kind of puzzled with European Central Bank is doing and Christine Lagarde, and how different their approaches are. So we have a trend line pointing to the existence of the downtrend. Now, in a shorter term time frame, this looks like a falling wedge. So bears appear to be in complete control below this area here. So if we see an oversold bounce back, if the oversold bounce back happens and we see a rally into this zone up here, then price would meet falling resistance trend line and also cluster of these previous lows and highs. And we can also apply a very basic fib here as well. So just to give you the update on what's happening with the Dow, I'm seeing a little bit of a reversal now. Sorry, I'm seeing a little bit of a reversal on that candle. So that's why I keep saying the only way you can read the candle is when it completes, when it's complete and when it finishes. So this was the 15-minute candle that I was talking about. Now markets are open. Look at the reversal. Here we go. The reversal is pushing higher. So I'm still okay. I'm gonna stay in this trade for a while longer. So I took half I took initial half at 33,465. Then I took slightly more than a half around this high here, and now I have the remainder of this position open with my stop loss here. So my stop loss is well above where I entered, just below the cluster of these lows, and I'm paying close attention to the current price action. If I see a push lower, then I will likely get out of this trade altogether. If I see a breakout above here and a gradual move higher, then I would be happy to hold it for the extension to the upside. So that's where I am with the Dow Jones at the moment. Okay, I'm keeping an eye on what's happening with S&P and also with Nasdaq. So going back to euro dollar, in my book appears to be bearish because you have a multiple layers of evidence pointing to significance of this resistance up here at 111.40. So anybody who's trading counter trend would likely be looking to take profits here. Anybody who's looking to re-enter short is looking for the oversold bounce back and then a rejection from there to the downside. The other bearish scenario would be if we see a loss of these cluster of the lows at 110.60. Potentially that could open the way for a gradual move lower towards 110, possibly even 109.40 to the downside. So 110.60, 110, 109.40 to the downside would be the levels where I would be paying attention to. So this is euro dollar. I have no trade at the moment. I would likely be sitting in a bearish camp here if I get the chance. I know there's few guys in the chat room who are long. Good luck. This could be a very good trade. Look, in even very severe and protracted downtrending markets, you have sweet oversold bounce backs, and if you can catch those, great. But just be aware that you are going against the trend, and that's where I am. So euro dollar is already posted in the community with the entry target, take profit, and stop loss levels already there. Okay, so the other thing that you mentioned is euro sterling, but let's look at a sterling dollar first, and then we can look at euro sterling to kind of finish it off, because they'll all tie in quite nicely together. Sterling dollar appears to be creating a little bit of a pennant here. This type of pattern does have the tendency to break to the upside, although this looks like a consolidation below previous significant support, which is now newly found resistance. That's up here, 134.35. So the key trading level going forward for me from the intraday point of view is 133.60. If we see a rally from here, sorry, I'm going to leave it there. If we see a rally from here and a breakout, potentially that could open the way for the extension to the upside and then retest of this 134.35.
So we're 10 minutes away now until we see the release of the final February reads for US market services and composite PMIs. Expect to remain unchanged from the prelim readings, with services PMI expected at 56.7, composite at 56.0.
So I have my news feeds on just in case. So the way people would trade this, they would take the widest point of this and extend it to the upside, so they will take profit here. Or if they're more speculative, they will take the distance from the previous breakout and extend that to the upside, and that gives them a take profit level. And then if you look left, this is your high and high. Yet again, this is turning into an educational session, and I don't want it to be. Sick and tired of education. Here we go. So I want it to be a trading session. So that's where we are with a sterling dollar. So key trading level is down here, 133.62. Breakouts above could potentially create an oversold bounce back towards 134.50. Most of the people who are looking to do that would likely be looking to put their stops just below 30, 40, 50 point stop for the potential extension to the upside. Otherwise, if we see a rejection here and a dip lower and a loss, an end of day close or a 4-hourly close below this area, all bets are off. US dollar strength continues, and then you could see a gradual move towards 132.70 in this case. So it's quite far away, and you really want to be stopped out in that case out of your long position, because you know this can trigger some significant move as well. Okay. Look, I don't like this anymore. I don't like this anymore. There's a selling pressure now. So what I'm going to do is I am going to get out of my position. I'm going to get out of my position very soon. So let me see if I can go down to a shorter time frame and see. Yeah. So if I wait for a 15-minute candle to complete, it could be completely different. And that should be in about 8 minutes time. So I am getting out of this. I don't like this anymore. Don't like this anymore. Look at the hourly candle. If the hourly candle finishes like that, or even lower, then that's indicating some severe profit taking. So here we go, guys. I am taking the last remaining part of this position. Thank you, Mr. Market. I'm so grateful for this trade. This trade was really, really, really lovely. I really enjoyed this trade. I'm so happy and grateful this happened. I'm so happy and grateful that this trade happened. So thank you, Mr. Market. I am ready for the next one. Okie dokie. Kabogo, can we look at a crude oil? Absolutely, yes. How are you doing, buddy? How are you doing, buddy? Let me see who else is in today. Woo! Said, Alex, Angelos, AFX, Caesar, Daniel, Matt, Mirror, Robin, Uzi, there's another Uzler, sorry if I'm not, Sam, Mr. Nyogu, Rose, Nadolo, anybody else who is watching us, welcome guys, welcome guys. Haifa, Mike W, Darren, Bob, Tammy's, yeah, quite a few people. So thank you. Okay, so let me go and talk to you about Euro Sterling, and then we can go and check out crude oil. So Raj, what's your take on Euro Sterling? What's your take? Oh, this is lovely. Oh, this is great. This looks bearish, guys. Now, why am I saying bearish? Well, I don't have a position. I don't have a trading position in this. Let's put it this way. I don't have a trading position in this. But when you look at this, Euro Sterling was going sideways, possibly even downwards for a very long time, but it was ranging from 134 to 134, 184 to 185, 86, down to 184, 185, and 184, 180. So it was kind of slowly moving lower and so on. And I was really hoping to see a loss and a weekly close below these clusters of the lows here at 183.90, 184 weekly close, and then I'm looking for more to the downside. I'm actually bearish euro. If you go from the basic, yet again, this is monthly time frame. You cannot trade this.
It's good to hear from Ukrainian foreign minister that Ukraine is looking at an option of deploying international peacekeepers.
Raj is saying looks bearish to me. Yeah. So from the kind of central bank point of view and a more of a kind of economic data or fundamental.
So 3 minutes now until the release of the final February reads for US market services and composite PMIs, expected at 56.7 and 50.0.
Okay. So now I am looking at this Dow and thinking, you muppet, why did you close now? But I'm happy. I'm happy. Nobody went bankrupt by cashing in too soon. Now, so from the trend point of view, you have Bank of England, which is hiking interest rates. That's normally perceived to be bullish for the currency, in this case sterling, pound sterling. On the other side, you have European Central Bank, which is saying we won't be doing anything. So that normally translates to a currency weakness, i.e. in this case euro. So from the central bank activity, unless something significantly changes, pound sterling should be stronger. Now, how far can this go? Well, I would take a basic fib and take fib from here to here, and I would be looking for a potential retracement levels. So this would be a retracement level towards 82.05, or call it 82. Then below that level there is this swing high here at 81.20. Then below that we have a cluster of these highs here, 79.60, and down here at 79. So this is all wishful thinking.
1 minute to go now.
I keep saying wishful thinking because I remember the time when you could get almost 1.5 euros, almost 1.5 euros for £1, and I was loving that time because my revenue was in sterling and I was spending in euros, so it was really good for me.
The Ukrainian energy minister there asking European partners to stop taking gas from Russia.
Now, will it go there? I don't know, but these are the levels where other people might be looking to possibly react to that. So from the closing level, then there is that 50% area down here. So the closing to closing means from the wick to the wick. Sorry, from the body of the candle to the body of the candle, rather than from wick to the wick. And you get this kind of clustering and so on. And
56.5 for services PMI, composite at 55.9 to beat the final February reads for US
a great
services
course.
PMI 56.5,
go to My Trading Skills,
rating
sign up.
56.7. Composite PMI as well, just dropping to 55.9, just below the 56.0
it's
expected.
Free. And it tells you how to trade fib retracements or how to use Fibonacci.
Looking to the report here, they note that new business growth accelerated to a 7-month high, while output charges rise at the fastest pace on record in the US, where the rate of job creation quickens to the sharpest since May of 2021, as data collected between the 10th and the 23rd of Feb.
Sorry, I'm just looking at these other markets here. Yeah, now I'm saying, you muppet, why did you close your Dow? Look, it's going higher. You should have held. You know what I mean. You know what I mean. Yeah. Those of you who traded before, you know exactly what I'm kind of instead of being grateful, and I really am, for the number of points that I took out of the trade, it's now starting to eat me alive that I didn't make this extra few pips on the upside, and it kind of works like that. And then what normally, but now I'm kind of, I've traded long enough now to know not to jump in and chase it now for these few extra pips, because if you do that, you know, it's gonna cost you more. So now I'm old enough to know not to do that, and I've been doing this for a very long time. But loads of people tend to do that. Okay, so the other thing from the euro sterling point of view, and Kabogo, I will definitely go and cover oil straight away. This looks really bearish as long as these clusters of the lows hold resistance 183, sorry, spot 83.90 or thereabout. From the daily point of view, there is a possibility that we could see an oversold bounce back, and then we could see another rejection to the downside, or we could see a gradual move lower and potential move to the downside. This oversold bounce back, why? Well, you have high, lower high, lower high, so that's your resistance in this case. And now we're going with this multiple layers of evidence approach, so that's your resistance. This is oversold bounce back. This is the key trading level on the upside as a resistance. And then also, if you do the same thing what I did before, and you take your fib from here to here, assuming that this is the low, then you're getting your fib clusters here as well as a retracement. So you suddenly have, you know, 3, 4, 5 different reasons why this is a good level. And then all I would do is I would basically mark it as a level of interest for me, and I would look to either place a limit order there, or a pending
insight
order.
Here
Sorry,
into
pending order.
The Ukraine and Russia talks, with a tweet here from a Ukraine government advisor saying that they are beginning to talk with Russian representatives. So key on the agenda, they note, is immediate ceasefire, a truce secondly, and thirdly, humanitarian corridors for the removal of civilians from destroyed or constantly shelled villages and cities.
A pending order with a stop above but I'm not a great euro sterling trader. I'm not a great euro sterling trader because it moves very slowly. It moves a small number of points. Average trading range is very, very small, compared to, let's say, euro dollar or something else that moves a lot. So it could be tedious and slow, and then you get bored, and then you do something stupid and you get out of your trade, even if it's a good trade, because you can't be bothered holding it anymore because it's not doing anything. It's just going sideways, 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 and so on, and it moves in a very small increment. So that's where I'm with the euro sterling, but that does appear to be bearish for me. Below 83.90, bearish below 83.
Again, those comments from the Ukraine presidential advisor just hitting the wires again. Talks starting with Russia.
So Bavesh, that feeling when you close and it gets high, I hate it. I have been trading myself. Bavesh is saying to move on and avoid thinking about it as it can interfere with my other trades. Yeah, absolutely. Yeah, absolutely.
So we're 10 minutes away now to the top
of
the hour with a few bits of US data set to be released. So starting with the US factory orders for January, 0.7% expected versus the prior of -0.4. Reuters seeing a range today of -0.3 to 1.7%, with the ex-transportation reading prior of 0.1%. While the final reads for January due out for US durable goods orders, 1.6% expected versus prior of 1.6, with the breakdown ex-transportation 0.7% expected. The cap goods orders non-defense ex-air prior 0.9%, while the cap goods ship non-defense ex-air prior of 1.9. Finally, from the US, the ISM Services Index for February, a reading of 61.1 expected versus prior 59.9. Orders seeing a range of 58.0 to 64.0.
Absolutely,
as well,
yeah.
to break down the new orders index, previously 61.7, while the prices paid index 82.3 previously.
Sorry, Kabogo is saying, can we go and look at oil, please? Well, crude oil is a really, really bullish, guys. So let me just go and do this quickly.
Additionally, at the top of the hour, we'll again be looking to Fed Chair Powell appearing before the Senate Banking Committee in Washington in day 2 of the semi-annual testimony to Congress. So the Powell will be explaining his blueprint for combating inflation after backing yesterday a quarter-point increase in interest rates this month, despite Russia's invasion of Ukraine. We have posted a link onto our board to watch the event live. As well, just be aware of further Fed speak later in the day, with 3:15 London time Fed's Mester set to be speaking on CNBC. So that's about 25 minutes time we expect to hear from Fed's Mester on CNBC additionally.
So crude oil, guys, appears to be really, really bullish. There is no two ways. There is no two ways about it, because firstly, Russia is oil-producing country and it's involved in a conflict. So that's one thing. And then it appears that intelligent money is parking in oil as well as a safe haven as well. Now you're seeing this massive trading range. Crude oil, this is US traded crude oil, went up to 115, 116 dollars per barrel. I think Brent went through 120 as well. So it's not unusual to see this type of kind of reversal and so on. What would I do at the moment? Would I buy or would I sell? Well, to be honest with you, I would be looking for a retracement, and I would be looking for a retracement at the same level that I was looking at yesterday, maybe down here at 105.50, 105.50, and then to see what happens there. So if we see a decent retracement, some profit taking, and then a nice reversal potentially, but I definitely would not be looking to short sell crude oil anytime soon, because this appears to be really, really bullish period for crude oil. You have a massive demand. The only way these prices can go lower is if we see demand destruction. If people suddenly, for some reason, stop driving cars, they stop flying planes, you know, and crude oil is not used for the production of heating oil, and suddenly there is this impact on demand for crude oil derivatives. Otherwise, crude oil is looking very, very bullish from the geopolitical risk, from the fundamental risk, from the supply and demand point of view, from various different things. And also, as I said, most of the market participants who are trading crude oil longer term from the institutional side are treating it as a safe haven. They're treating it in the same way as they're treating US dollar or Swiss franc or Japanese yen or gold at this point in time. Okay, so I don't really have much to
With
add.
US political news now, and Republicans are urging approval of a delayed natural gas pipeline permit.
I don't really have much to add to that, Kabogo, but are you in this trade? I'll just give you a direct message. Are you in a trade already? What is your take, Kabogo? What are you looking at? Sorry, apologies, I've hit my headphones microphone. I don't know what to do with this at this point in time, really. He's saying nope. I just wanted to know if I should go long. I'm bullish oil, but it didn't come to my level where I could comfortably buy and say this gives me a higher probability entry with the acceptable amount of risk. So I didn't get that. So I'm not in the trade. You know, I normally go long oil, but it's not there. So I'm staying away from it. I'm not touching it because it can flip. Raj, thanks for Euro Sterling, Philip. Your analysis like Katana, always sharp and cuts through the market. Bullshit. Well, thank you, Raj. I liked your stuff as well. I really liked the way you you analyze the market.
So 3 minutes away now to the top of the hour, again waiting the release of the US ISM Services Index for February, reading of 61.1 expected.
So
Factory orders for January 0.7%, while the final January reads for durable goods orders 1.6% expected.
What we're going to do is we are going to wait for the economic data to come out.
Some trade news here as China has bought US corn and soybeans as Ukraine war roils trade.
And then I'll see if anything changes. But here we go. A little bit of a selling pressure in euro dollar, a little bit of a selling pressure in sterling, sterling dollar, a little bit of a retracement here, but still bearish in dollar yen. So I'm still in this trade. That's my losing trade. That's my only open trade at the moment. I'm only this is my, sorry, apologies, I don't know why is this doing that. So this is my only trade at the moment, and it's a losing trade. So I'm risking 50 points on this trade. Let's see. It could move within the next couple of minutes on US data, US dollar strength or weakness, or it can possibly move on Fed's testimony a little bit later on today. But I don't think we'll be surprised in what he has to say. So anyway, so I'm still holding this position short. I'm still holding this position short. Other than that, I am out of everything. I was stopped out of FTSE with a small profit, and I'm out of my Dow trade. I'm really happy with that trade. Okay. Here we go. The power of the prevailing trend. The power of the prevailing trend. Look.
1 minute to go.
Selling pressure. 1 minute. Let's hear. Let's hear. This is a dollar card. Let's put dollar card on as well and see if that does anything. $30 seconds. Factory orders. ISM non-manufacturing prices. PMIs. 10
seconds.
Hey! 10 seconds. Exciting.
56.5 for ISM, factory orders at 1.4%, while durable goods coming in at 1.6%. To beat that's the US ISM Services Index 56.5, dropping below the expected 61.1, while factory orders at doubling the expected reading, coming in at 1.4 versus expected 0.7, ex-transportation at 1.0, and the final January reads for durable goods orders as expected, unchanged at 1.6%, the ex-transportation at 0.7%, cap goods orders non-defense ex-air 1%, while the cap goods ship non-defense ex-air 1.9%.
That's it. Okay. A small reaction.
Some housing data as well coming through there as the 30-year fixed rate mortgages in the US at 3.76% for the week versus a par of 3.89.
A small reaction, but reaction in the right direction. This is dollar yen. Dollar yen reaction in the right direction. Really happy.
Just looking on the breakdown there for the ISM non-manufacturing business activity at 55.1, prices paid at 83.1, that was dropping below the prior of 82.3. On new orders at 56.1, again a drop versus expected prior 61.7, employment at 48.5, as the PMI index in new orders was at the lowest since February 2021.
Well, guys, that brings me to the end of the broadcast
as well, in the
today.
ISM employment index was below 50 for the first time since January 2021, the lowest since August 2020.
So I'll start the broadcast earlier tomorrow at 1:15 my time. 1:15 my time. Because of the US non-farm payrolls. So I'm pretty sure we can get some decent setups for the volatility breakouts. So I'll be doing that tomorrow at earlier time. So hopefully I'll see some of you there. Stay safe, happy trading, and good luck. Thanks for watching. Bye for now. Thanks.